So here we are coming up on Friday, March 7th. The strategic Bitcoin reserve was just announced. It actually closed at 562 and then sold off, and now it's back almost to these levels. So the option pricing is actually going to be accurate that we're looking at now, even though we're looking at the options from yesterday. I'm going to click April 4th, so a little less than a month. And this assumes you're going to DCA. I'm going to clear. Oh no, I don't have any. So we're going to start with selling a put because that's going to fund it. You get the most money selling the at the money put. And so the $50 50 put is selling for 310. Let's just look real quick. So $50.50 is somewhere between Bitcoin 87, 846 and 51 is 89. So it's right in that 88 range where it's trading now. And that's what you're committing to. You're committing to basically on April 4th, buy Bitcoin or buy 5,000 $5,050 worth of Bitcoin. Does that make sense? Yeah, 5,000. Yep, $5,050 worth of Bitcoin. Because you're buying 100 shares of IBIT price. And somebody's going to give you $310 today. So they're going to give you 5% almost of that price today for doing that. Now, your broker's probably going to lock up the full $5,050 of margin, and we don't necessarily want them to do that. So what we're going to do is we're going to buy a put, which is also going to hedge you down below. When we look at this, you can see the pricing really starts to fall off about 43, 42.5. Let's just sell these 43s. That's going to give us a nice hedge. So total, we're going to collect $243. Just to look at where 43 was. 43 is Bitcoin 75. And a lot of people are saying, like, if that happens, like if we fall off that cliff, who knows, look out below. And so you're really capping your losses there. So yes, you are committing $5,050, but no, like you can only lose $750 because you would be hedged there. Now, the problem is we can't buy much of a call for 243. In fact, if we just go back and we click buy a call and we go back up, well, you could buy the 53 call. So for 53, you would participate in rallies at 93, which is actually okay. Because we're hoping things are just going to rip a lot higher. And you can see the very bottom of this chart, $60 Bitcoin is not even to its recent all-time high. I think it touched 107, 108, 109 up there. But you wouldn't be getting in until $53 basically by doing that. So that is one variation. And it just kind of depends on your risk reward. But essentially, this is no cost. You're actually getting a $9 credit. They probably won't give you the full $9, but you probably get like $5. So you get like $5, right? And when we click, oh, and you can see there the max loss. Hold on, before we do this, go away. Okay. You see the max loss right here is $745 because you collected the 5. Exactly like I said. Let's put the $5 back. 0.05, not 5 contracts. 0.05. So this is the basic strategy. We're going to say we want a credit, and you can see they're only going to lock up that $750 of collateral, which is pretty nice. It's a very, very capital efficient strategy. So I'm going to try a different version. We're just going to go here. We're going to get rid of this 53 call, and we're going to do something. Oh, actually, yeah, we're going to do something different. So the total credit is 243. If I sell 2 of these, like if I'm really bullish and I think Bitcoin's going to be above this, I don't mind buying at basically Bitcoin 88. I can sell 2 of these. $243 times 2 is 480. So now all of a sudden this gets interesting. So I could buy right above. Well, I could buy the call right above, and I still have $1.20 to play with. I can come up here and buy what I call a lottery ticket call. Well, actually buy just a little bit cheaper. And so what I have to do here is I have to edit my ratios. So I have to sell 2 of the puts. So I'm committing to spend $10,100. $10,100 to buy $10,100 worth of Bitcoin at essentially 88. I still have my double hedge, right? My collateral requirement's going to go up to 1,500. But what I did is now I can have the opportunity to control 200 shares of Bitcoin at $50.50. We already looked at that. 57 is at Bitcoin 100. And so if it just shoots through the moon, I lock in my price to buy at those levels. And if we look, now I can actually make a credit. Again, they won't give me 37. They might give me 30, maybe not. They're pretty stingy. You have to kind of go the middle of the middle. Like you can see the credit price is between 14 and 59. That's the bid ask. The middle is exactly what they quoted me, 37. It's probably going to be 30 or 29. I'm just going to say 28. I start with 30 and I put the order in. So I'm collecting $27. Like from the jump, I'm cash flow positive on this trade simply for my promise. And the promise is, you can see down there, is to buy 2 contracts. I have to pay, if Bitcoin is below, or excuse me, IBIT is below $50.50, which means Bitcoin's below 88, I still have to pay 10,100. That's the $50.50 times 100 shares times 2 contracts. So $10,100 at basically the price of $88,000 Bitcoin. And I have to buy those shares. The good news is if like whatever, we enter a global recession, stock market just drags everything down, even though the news is bullish, then what happens is I'm like totally hedged out from below 43, which as we saw was about Bitcoin 75, 548. So that's kind of a cool trade. And now I control 100 shares at the same $50.50, but I also control another 100 shares above 57 if Bitcoin goes to 135 or something crazy like that. Then I get to buy those shares. So like all of this is a part of a dollar cost average strategy. So basically I'm saying, okay, I like this strategic reserve thing. I think I want to get into Bitcoin. I like doing it in my brokerage account. I'm going to dollar cost average anyway. Well, if it rips without you, you miss the train. This is a way to do it if you were bullish Bitcoin and if you didn't mind buying it at this price at 88. You don't have to put any money out of pocket now. In fact, you're going to get $27. You're only locking up $1,500 of collateral. If you have other stocks in your brokerage, they're just going to kind of put that on hold. And then you're going to dollar cost into the $10,100 between now and April 4th, which is almost a month. If that can't be done, you can do other months. So let's just clear this bad boy out. Clear it out. Let's go all the way to May 16th. That gives you 2.5 months. We can see the $50 calls. Well, that's $50 calls. We can sell the $50 puts. Before we were selling a 50-50. This is just a $50. We can sell the 435s. Looks like Bitcoin's gone up to 571 since we started talking. We sell the 435s. We're going to buy a little hedge put. The problem is when you go out in time, all this stuff becomes a little more expensive. You have to go a little bit further down. Let's try these 41s. So we're still going to collect 313. That seems pretty good. Let's see what just a single will do. Change to buy call. So we can control it at one contract at 46, which isn't great. I think before we were still getting in at like 53. Now it's 56. And the reason being is because this is a form of leverage. And so if you're going to control somebody else's shares and you want 2.5 months to do it, they're going to charge you extra. So one thing you could do is for the shorter duration options, you could just do the single like we looked at first. And for these longer term ones, you could actually do, this is where you would actually do the doubles, right? And since you can see like the price doesn't fall off down here, so you can kind of hedge, we'll clear it out. And like one area of support, Bitcoin seemed to bounce at like that 48. And then again at that like 46.50, like, or 47, at 42. So we want a little more money. So we can look at the 48 and doubling that, because now you're making $1 less than if you went up here. But you have a little room to be wrong. And now if you take delivery of it, you're not committing 10,000, 2 times 50 times 100 shares. You're committing 9,600. We can see about a little bit cheaper hedge. You still want one of these because this kind of guards your buying power. Gosh. We'll try this guy, but we're getting down there. So we can see we collect 428, which seems pretty good. And if we double that, we get $9. Oh wait, I know I did something wrong. We're not selling that one too. We're buying it. That actually seemed too good to be true. Oh no, wait, did I do it right? Oh, we're not buying that. We're selling it. So now they're gonna, yeah, there we go. 252. That makes more sense. So we got about $500 to play with here for the call. We can buy like basically right at the money or right above it for 498 and kind of be even and control it right there. Or we can give away a little bit of that upside. We can do not a lot of room to play with. The lottery ticket call is going to be way up there. Yeah, way up there. So yeah, you can just control at the money. Go back in here and edit ratio. We go to, so you control it at the money from 51 up, but you're agreeing to buy it lower. And if we look, again, there's our credit. We may not get $7 because it's like the bid ask is, I think they want us to pay 17. So whatever, they'll probably give us like $3, $2, whatever. Oh, and yes, we want a credit. You have to lock up 1,800 of collateral, that 900 times 2, because again, you're committing to buy 9,600, or you're going to pay 4,800 for 100 shares of IBIT, but you're going to do that twice. You're going to get stopped out at 39. 39 is, it's just under 70. You can see 40 is at the top there. So you don't quite have as good of a hedge, but you have a lot more time. It goes out till May. So that's the problem with time. So at any rate, you can kind of see the dynamics of this. If you're not financial advice, do your own research, take your own risks. But if you were looking to dollar cost average into this asset class, you didn't have the funds available now, but you have equity in your stock portfolio, you could just go ahead and lock in today's price ranges. The day after the announcement of the strategic reserve, apparently there's more announcements coming. It could be the sell of the news fact, in which case the price will go down, but you're still committed to buy at whatever you commit to right now. But if it rips higher, at least you control 100 shares to the upside. So that's the benefit. You can see we did all of this for no cost. In fact, you collected money, and that gives you time to cobble together funds to make good on the promises that are backed by the collateral of your other stocks. Hope this helps. Talk to you soon.